Hello, welcome back to J Trading. It's Jupiter again. I'm back with another video. So as I promised yesterday, I'm gonna be doing analysis video every day. So today marks the first day of our daily market analysis. So every day we are going to do this. Yeah, we are going to look at the market, especially on those assets that I am trading on. So if you can see here, currently I'm trading boom 1000, boom 300, boom 500, and at last crush 300. So as you can see, the lot sizes are different. It varies from 5 to 1 to the lowest one is 0.5. So those lot sizes, they are according to my confidence level to the market. If I am very confident about the market, I use bigger lot size like 5, and if I am less confident about the market, I use lot size like 0.5. So I am currently sitting on 1400 USD profit. This is a legit real account. As you can see, I'll be hiding my balance. I don't want to show how much I have. That will be the deal with us. If you know me, I don't share that with everyone. So yeah, now let's analyze the market. We are going to start from boom 1000, I guess. Yeah, let's start from boom 1000. So I'm going to do this every day. That will help you a lot, I guess. Before you take your trade, you can watch my videos every day. Yeah, watch my videos and mix with what you know about the market, what you have decided. If you are going to buy boom 1000 and you watch my video and see the reasons that are the same with your decision, let's say we both are going to buy 1000, boom 1000, that would be good, right? Yeah, that means you'll be confirming the market. I'm not 100% sure where the market goes, but if your idea and my idea is almost the same, that means we are almost on the same boat. So that will be very helpful to you guys, I guess. So yeah, the first thing we are going to do is go to higher time frame, as we always do. You always start from higher time frame. Since we are not long-term traders, we are not going to pass above 4 hour. I'll always be starting from 4 hour. I'll go down 1 hour, then accordingly to 30 minutes or 50 minutes. That will be the deal. So on boom 1000 4 hour, the chart looks like this. The market was on a high momentum movement like this upward, then it started taking a breath here. Right now it is in a small upward movement, but what we can anticipate here is let me take you to whiteboard here. So what we are going to do is, for me, the strategy that I follow is I follow a liquidity strategy. There is something that you have to know, which is called liquidity. Liquidity is a basic concept in a market that you have to know. Liquidity means there is a market which is moving up and down like this, and there are market makers. For example, Deriv. In our case, Deriv is a market maker. You can take Deriv as MM, and we have traders here. So liquidity is a place where traders will be putting stop loss and take profit. Those places are called liquidity. So what market makers usually do is they always make decisions around these liquidity areas. All right, on those areas there will be decision always. That means the market either turns up or down. So those areas will be the areas that you're going to take your decision either to buy or to sell. So let's say the market is going up like this. So in a market which is going up like this, it is very hard to decide if it's going to reverse, right? You have no idea if the market is going to go down here or if it's going to go up a little bit and turn down like this. So you have no idea. But what you do is you have to draw important zones in a resistance areas like this and wait for the market to wipe out stop losses. Usually people put stop losses in a very important area like this. This area is resistance, so that means most people will be putting stop loss there. So what market makers do is the market goes up above this area, all right, wipe out everyone, wipe out all the stop losses and break down, make sure that that structure is broken and continue the rally down. So if you want to catch this rally, if you want to catch the trend, what you have to do is always wait for the market to grab liquidity. Liquidity is the area where most traders put stop loss, all right. Those areas are very important. So if we go back to this chart here, all right, this is 4-hour time frame, right? So in a 4-hour time frame, if you can see here, we have this area, all right. This red line indicates that market has been sorry, let me grab arrow here. Yeah, so here market structure changed, all right. The market reversed again here 3 times. So that means most traders will be putting their stop loss just above this area. So that means the area just above this red line will be a liquidity. It is a liquidity grab zone. So you have to grab a rectangle like this. Let's change the color of the rectangle. Let's make it fill and change the color to maybe light blue like this. Yeah, so this area right here, the light blue area, is a liquidity grab area. Most traders will be putting their stop loss around this area. So what market makers do is they push the market way up like this above the area, because most traders have stop loss here. So the market wipes out all the stop loss, all right, then reverses its direction down like this. So that means it's going to wipe out traders in both way, because after breakout there are other traders who trade breakout. They'll be taking buy trades here. But what the market does is it does the opposite, wipes out the buyers, wipes out the sellers, and it goes in the market makers way. So if you want to be in a smart money side, always you have to wait for these liquidity grab zones, all right. Wait for the liquidity area. After the market wipes out those stop loss, you go to lower time frame. Let's go to lower time frame and let's see. So how do we know this area is a reversal or a liquidity grab zone? Since it's above the stop loss zone or the liquidity grab zone, what you have to do is grab a line like this and wait for the market to make a reversal. It made a reversal here. Again, we have another let me grab horizontal line. Okay, yeah, so we have another reversal here. You see this line, right? This, let me change the color so that you can see clearly. Let's change the color to green here. All right, so this green line, as you can see here, the market touched this area, it came back down to this green line and it bounced up. So this will be a structure for us. If this line, if this green line gets broken, that means the market structure changed to downward. So wait for the market to change or to break this green area. As you can see, it broke here with a big momentum. As you can see, this big candle here, you see this one, right? It broke the green line, the market came down like this, price came down like this, went up, it tested the green area again, you see, then it pushed down. Sorry, this thing is giving me a hard time. Yeah, you see, it pushed down like this. So that's how I took a trade there. The market broke this green area, came back and tested the structure, went straight down. So the first point you have to take is you have to wait for the market to go above liquidity. Step 1, liquidity grab. All right, liquidity grab. Step 2, you have to wait for the structure to be broken. Structure means you have to draw an important line, wait for the market to break that end. Step 3, retest. When the price retests that structure, important structure, you have to take a trade over there, either sell or buy. So these 3 will be our very important principles. Wait for this always. Either buy or sell, always wait for liquidity, structure getting broken, and a retest. That's what I did here. Now let's go to boom 300. Boom 300, actually there is nothing happening, it's consolidating. Market looks like it is forming a flag like this. All right, it's kind of bearish flag, but I'm trying to catch, what's this consolidation, up and down movement. I'm trying to scalp here when the market moves from this area to this area. So that's why I took this trade. There is nothing more, there is no secret here. But if the market breaks this bearish flag, you know what it means, you know what the deal is. The market goes down, all right, since it's bearish flag. But for now I'll be scalping this market. The other one is boom 500. So boom 500, yesterday we saw this, all right. Even though I didn't make any analysis, any explanation about this, you saw this trade. Since yesterday I've been holding this one. Yeah, so I took this trade. It's always point. As you can see here, we have double bottom here. The market bounced here, bounced again, and third time it came here. So I took a trade over there because this is a triple bottom pattern. There is no big deal over here. If you want to make things complicated, or to be sure, you can use Pitchfork, this channel right here. I think I lost Pitchfork. Yeah, Andrew's Pitchfork. So this one, you start with this point here and draw the fork like this. It is a channel. You start from the point where the market reversed its direction, where which this one, it starts reversing the direction. Here again we have the second reversal and the third one. So the first reversal is the start of the Pitchfork, and the second reversal is the second and the third reversal are the start of the fork, arms. So the fork starts here. So when the market price breaks out of this fork here, you see it broke out of the fork at this level, right, and it came back to the horizontal box area here to make sure that the structure broken is completely bullish. So you take a trade over there since it broke out of the channel and it came back to this box area, the light blue box area. So you take a trade over there, voila, you make money like this. You see, that's how I took this trade. The last one is crush 300. Crush 300 looks like it has been going down for a while like this with a big momentum here. Then the market looks like it is taking a breath around this area. So what I did was, if you can see here, we have an important reversal level here. All right, this point right here, the market bounced up after a big rally. So that area is very, very important. You have to catch this area because the market was falling, right? Look at the price. The price was falling with a big momentum, but at this point it started bouncing. That means this area right here is very important. So let's grab a box, right? Put that area as a liquidity area where people will be putting stop loss. You know what that means, right? As I told you, liquidity is a place where traders put stop loss and take profit. So since the market bounced huge at this area, traders will be putting stop loss just below, and some traders will also be taking profit, right? So that means this area is very important. All right, so you have to wait for the market to break this box. So when the market breaks this light blue box area, that means it's very strong. That means that the market has a strength. So when it comes back to this structure area, you take a trade there. That's what I did. I waited for the market to break this box area. It came back to the structure. I took sale. I was so sure about this market because the market is already in a bear market. It is falling with a huge momentum. This is a falling knife, all right? So it took a breath over there. That means whenever the market takes a break, that's where you get in. You don't get in here. Most people panic and they take sell here, sell here, sell here. I know you would have made money, but who knows if it had, reversed like this. You don't know, right? What you have to do is wait for the market to take a break like this. When the market takes break like this, you wait for it. You give it a structure. You draw a structure like this. this green line in this box. All right, when it breaks down, that means you are sure that the market is going to go down, so you take a trade over there. That's why I took this trade. So guys, I hope you caught something from today's analysis. I'll be doing the same videos like this, short, like maybe 10-12 minutes every day. Yeah, so tomorrow I'll come back with another video, maybe another trade if there are trades. Otherwise, I'll just make analysis. Thanks for tuning in. If you're new, please consider subscribing. Otherwise, like the video. See you tomorrow.